Trading Live. You are now part of a growing group of do-it-yourself traders who are trying to change the way investors think about building wealth. But because we don't believe in using financial advisors, stock tips, or traditional financial media, we have to do things different. We have to do things smarter. We do that through an art and a science we call trade hacking. At Navigation Trading, our methodology is based on statistics and probabilities, not hype or emotion. Our core strategies have been used by market makers, hedge funds, and floor traders for many years. Now, we share these secrets with you. Whether your goal is to make an extra $1,000 per month or replace your current income, with our guidance, you can achieve financial success beyond your wildest dreams. So, let's get started.
Good morning, Navigation Traders. Today is Monday, November 6th. Hope everybody had a great weekend. Welcome to Navigation Trading Live. If you haven't already, make sure you connect with us on social media. Stay up to date of all the cool stuff we've got coming out for you. We're constantly coming up with new content, new videos, new tools, all kinds of stuff to make you a more successful trader. In this session, every Monday morning right before the markets open, Navigation Trading Live is all about you. So if you have any suggestions on topics you want us to cover, please post them in the comments here on Facebook or YouTube. We stream live from Facebook and YouTube simultaneously every Monday morning. Or you can always drop us an email at info@navigationtrading.com. One quick announcement before we head over to the platform. We've got a new course coming out. We're really excited about this one. This is one that has been long anticipated. At Navigation Trading, we trade a lot of options on futures, and there's very specific reasons that we do so. There's some value from a standpoint of better leverage, having to use less buying power to enter the trades versus stocks and ETFs. There are some markets like natural gas and oil that just don't really have tradable stocks or ETFs, and so we can do those on the underlying futures. So we've put together this course, How to Trade Options on Futures for Max Leverage, and this is really a full step-by-step A to Z guide for trading options on futures. Last week, I mentioned on the broadcast, as well as I sent out an email just asking for some help and really it was just one question, and my question was, what are the top 2 things that we must answer in this course for you, the student? And we got an overwhelming response. We got dozens and dozens of people submitting things that they wanted to make sure that we covered, and so it was excellent. A lot of the stuff we had already covered in the content of the course, but there was a couple things that I didn't necessarily address, or what I did is I went back and I redid a couple videos and redid kind of a frequently asked questions video itself, and just readdressed and confirmed and clarified all the questions that were sent to us. So I think you're really going to like this. Stay tuned. Look for this coming soon. If it's kind of in its final stages of editing. So if not by the end of this week, then you'll see it early next week. So coming really soon. Also, another quick announcement that I didn't put up here, but I am really close to getting our deals finalized with a couple major options brokers. And so I know we've been kind of waiting on this. It's been a long awaited situation where we've been trying to get this done for you guys to get reduced commission rates, get some other valuable tools from a couple of the top-rated options brokers. So we're almost there, and so I will be announcing that soon as well. So stay tuned for that. So let's go to the platform, take a look at what's going on in the markets. The market opens up here in about 10 seconds, and you can see things are pretty flat. Not a lot of movement. Stocks relatively flat. Bonds are up a little bit. See the VIX futures, there's the opening bell. VIX futures are down a little bit. Oil's just slightly up. Gold pretty flat. Let's take a look at some of these other major markets. All the grains are up just a little bit. You can see FXI down a little bit, the Chinese large cap. FXE, the euro, down a little bit. EEM, emerging markets, up slightly. EWZ, kind of the biggest mover, up a little over 1%. See what's going on with EWZ. It's been on a downhill slide, so a little up move there. That'll help one of our positions. Biotech's pretty flat, and everything else relatively flat. You can see the currency is all pretty flat as well. Let's take a look at some of the stocks. Not too many movers here. AVGO up almost a couple percent here. We don't trade that a lot, except for potentially around earnings. Let's see if there's any other big movers with the market just opening here. Momo up 1%, and Qualcomm up over 4% after a huge move after earnings. This thing's just been running up. So implied volatility is extremely high in there. So that's one that we'll be actually taking a look at potentially for alerts. Snapchat down a little bit, and that's really it. No other major movers there. So what I want to do for our trade of the week, assuming the implied volatility didn't crush over the weekend, one that I've been watching and wanting to put a position on is in FXI, and it's actually up this morning, so it should be a decent entry point. So I want to sell some premium, implied volatility nice and high in here. And so the type of strategy that I'm going to look at initially is a strangle. And so selling a short strangle, we want to be in that 30 to 60 days to expiration, so that 39 is perfect. So if we go to the option string, and you can see you've got, we'd like to be kind of in that 16 to 20 delta. If it's higher, I like to opt for the higher delta, in this case 25. So let's see what this looks like if we sell a strangle. Go over about the same distance in, I like to stay away from the half point wide strikes in FXI, so I'd probably go with a 44 in this case, which is 21 delta. So a little bit lower on the put side, but that's okay. So take a look at the 44, collecting the credit of 74, probably get filled around 72. Let's analyze that and set our slices to break even, like we like to do, just to show our probability of profit. And sometimes this works out. Sometimes you got to move it yourself. So let's put that right on the break even. So over 63% initial probability of profit. Obviously, the way that we manage our winners, that probability is going to be closer to 80-85% probability of winning on this trade. So looks pretty good. So a question that I get a lot from members is, well, why are you doing a strangle? Why not an iron condor or some other type of strategy? And the one thing I'll tell you specific to FXI is based on the underlying implied volatility and based on the fact that FXI is only a $46 ETF, it's really hard to buy the wings on for an iron condor and collect enough credit to make it worth it. You've got transaction costs, and then the little bit of slippage that you get getting in and out of the trade as far as where you get filled. It's just not worth putting on an iron condor. So I really like to do more of the undefined risk, more of the strangles in the lower price stocks and ETFs. And when I say lower price, I mean if it's trading under 100 and specifically in this case under 50, I'm definitely going to do undefined risk, just because you can't collect enough credit on an iron condor to do so. The other option that you do have, if you're in an IRA, obviously you can buy the wings way far out and you can still get a decent credit. But the other way to do that is, the other option would be to buy a butterfly. So if you go right at the money, let's say the 46, I like to do butterflies on the call side, buy butterfly. spread our wings out beyond the expected move. So let's say 3 points. So you could do 43 on the downside and 49 on the upside. So 46 is at the money and then 3 on both sides. Then you're getting about $1.27 as far as the debit goes. And that would look like this. So if you have to do defined risk, or if you absolutely want to do defined risk, you could do a butterfly here. You're only risking $126 per contract, so you could do this in a small account. Obviously, the probabilities initially are lower, but your profit potential is higher, or you're most likely going to be able to take profits quicker, assuming price stays in your range. So if you're going to do defined risk, I would opt to go to a butterfly. That way you've got enough profit potential to make up for buying the wings because you're getting closer to the money. But if you're okay with doing undefined risk, I would look at a strangle. So I hope that's helpful. I am going to work this order, and if I get filled, I will shoot it out to alert subscribers. If you haven't checked out Navigation Alerts, we still have a special for $7 for a 2-week trial. So if you're interested, NavigationTrading.com, click on 2-week trial and check it out. Everybody have a great week of trading. We will talk to you soon.